Hi everyone and welcome back to today's more important Tuesday the 27th of October with me, Rich Pro Market Analyst at Handtech Markets. Moving on to sterling dollar now. We've just had out the UK GDP data and it was a slight miss of expectations, and there was been a slight reaction to the downside on that news. Now, how generally has that affected the chart? Well, not too significantly on the daily chart yet, but still I think that what we have seen is this rolling over of this sort of consolidation phase. Rolled over, slight rebound yesterday, and again slightly today, just lower. Now, I would argue that there is a very slight bearish bias in this chart, purely for the fact that you've sort of got these stochastics falling away. But generally speaking, the momentum indicators are not too bad. So it's not too significant in terms of bearishness, and I think unless you sort of saw a retreat back towards 52 figure, which is that reaction low there, 52 figure I think is a key support near term, because it I think it signifies the fact that if that is broken, then you're going to be putting real pressure on the big range lows again. But until that is seen, I think that we can be a little bit more neutral, I think, on cable, because it's not too significant. And yesterday's sort of recovery candle, I think, sort of gives us a little bit of a possibly opportunity to trade just very near-term short. Here we go on the hourly chart. We've got this breakdown of this trading range. If I zoom out, you can see the trading range which broke down, gave us 90 ticks of downside. That 90 tick downside from 50, sort of 54.15 area, gave us sort of 53.25, I suppose you'd calculate out. So it's already seen that, and the low was a sort of 53 figure. So it's seen that move and recovered from that. But you would still argue that the momentum indicators are not all that bearish, really. Even though, yes, in just in the last few minutes, we've started to see cable slide again, and perhaps this is going to give us more of a more sort of corrective look to the chart. But certainly on a near-term basis, you'd say that rallies are a little chance to sell. But until you see a breakdown of below that 52 figure mark, I'm not going to get too sort of medium term sort of downside in my bias. So little near-term trades is how I play cable at the moment. And yes, we've had this reaction to the downside, but not turned negative quite yet. In terms of the momentum, it's still sort of fairly much rangy, although there is still a bearish bias. You would argue you'd still rather be short than long, certainly. And I think using any of these little near-term bounces as a chance for a short-term sell position. However, just be mindful of this big support that comes in at 52 figure. Breaking below 53 figure obviously would then open 52 figure, because 53 figure was the low in the last couple of days, and that would certainly signify we're going to sort of be drifting back towards that 52 figure mark. But certainly at the moment, I'm not too overly bearish. I'm just sort of got a slight bearish bias, and I would rather be short than long, but not massively bearish on cable. So I wish you good luck in your trading, and I'll speak to you later.